live in YouTube, guys, and it's time to get some stuff done. Can you hear me okay? I switched over to my headset microphone. Want to deafen you guys, make you hurt. No volume, good volume, all the volume, some of the volume. Guys, we're gonna rock it out today. I'm excited. Did you know that it's just patterns? Everything about day trading, guys, it's just patterns. That's all it is. Day trading doesn't have to be difficult. It doesn't have to be stressful, guys. It's just looking at indicators and listening, like not thinking about the money you want to make or need to make or have to make or the job you're trying to replace, but just going, man, are things good? If they are, let's take a trade, right? So every morning starts with news. I go to news, I check it. I want to know when people that are reacting to things could be reacting. And that's that high impact, guys. That high impact news can make things go sideways. It can speed up the market to a point where my indicators become unreadable, where I don't have time to execute. And with what we teach in this room, trading news is not a part of the plan. Reacting to news is not a part of the plan. News gives us an opportunity to sidestep that reaction, to maintain our edge rather than getting emotional. And today is Wednesday, the 22nd, and there is no high impact news, but there is crude oil inventories at 10:30 a.m. And crude oil inventories has been known to make a market spike or jump. It's also been known to make a crude oil market go just absolutely flatlined for the first hour or two before it happens. And sometimes it's nuts the hour before it happens because they're jockeying for position, because there are people with a lot of money that may be making decisions on that. So stopping off here and checking it every morning is part of what I do. And then, of course, one for the lawyers, right? Guys, this is an educational room. This is not a room where I call trades. This is not a room where I give trading advice. This is a room where what I do is I teach you to read your indicators so that you can make great decisions. And I do it on two platforms. I will talk about, whew, that seems big and bright, doesn't it? I will talk about both NinjaTrader, and that'll be the first platform that we discuss. We'll talk about one trade, three rules, two charts, best of the best, and how to do it if you are a NinjaTrader user. If you are evaluating our indicators on NinjaTrader, I'm going to hand you a plan. I'm going to teach you how to study. I will give you everything that you need to be successful with the software. If you are a TradingView user, after we go through NinjaTrader, TradingView is for you. They're very different, but they're also very similar, guys. Know which platform you're on, because the rules are different and they aren't difficult to confuse if you're not paying attention. So NinjaTrader and TradingView, and then my job description, guys, what's on my resume, my LinkedIn, says that I teach people to read indicators, and that is precisely what I do. I will teach you to read your indicators, to recognize advantages, guys. And I'm going to give you checklists for both trades. So when I talk about NinjaTrader, hold on. When I talk about NinjaTrader, there we go. I'm going to hand you a plan. I'm going to give you a plan that is designed to optimize your chances of success, a plan that is designed to teach you to read your indicators, a plan that is designed to give you a checklist to enter the market with the greatest chance of success. On TradingView, you will get the exact same thing. You will have a checklist. It's only two charts. And guys, the idea is that we're going to build a foundation. And that foundation will allow you to read your indicators. That foundation is going to get you in the habit of recognizing advantages, guys. And every time you look at a chart, you're going to go through a routine to make sure that you have what you need, because those advantages become your trade. Good morning, Miss Trina. Chart reading accounts for about 90% of the typical day, guys. About 10% of your day is trading. So, for a little perspective on that, if I am sitting at my computer for 6 hours today and I'm looking for trades, I am likely to be active maybe 36 minutes. Maybe 36 minutes, guys. Trading is not about being busy. Trading is not about catching every tick, every move, every turn. Trading is about catching the best moves, the highest probability moves, the moves that you can prove win more than they lose, because that's what creates the edge. That's what we talk about. You're going to understand with a little bit of study, once you are comfortable reading your indicators, you'll understand three concepts, guys: where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. Morning, Alex. Good to see you. And guys, these concepts become ways to enter, ways to manage, and I think most importantly, ways to embrace the 90%. You will, I hope, my hope and wish for you is that you get to the point to where you say to yourself, my rules aren't met. I don't even want to be in a trade. I don't care what the market does next, because I can't prove that I have an advantage going into this trade. So we are going to learn the triggerline Fibonacci rules for when it's okay to trade, guys. We're going to learn the rules for when it's okay to trade, and it's really generic. When is it okay to trade? Well, for me, as a brand new user, it's okay to trade when my rules are met, when I can define advantages, when I recognize that I have an edge. And of course, the flip side of that is, when is it okay to not be in a trade, guys? When you look at your charts and you say, dag nabbit, they're not giving me what I need, I choose not to enter. Why on earth would I hope? I'm better than that. Everybody in the room has the ability to simulate, to practice, guys, to break a million rules, to make 1,000 mistakes as a brand new user on simulator while you learn these patterns, while you learn these rules. The easiest way to get to where you want to be, the easiest way to grow your awareness is to post in my room. And it's odd that the people that post the most in my room right now seem to win the most. The people that post the most in my room are the people that seem to move forward the fastest. Um, and I've even got experienced traders. And Wayne, I'm going to put you out real quick. Wayne's been with us for a long time, and Wayne's been with us and he's a fantastic trader. And Wayne's like, man, I think there's ways to do more. So now Wayne's starting to post in the room, and he's saying, hey, let's talk management, Mark. Let's talk about this trading view platform and this opportunity for more. And the cool thing is every time he does it, Wayne gets a private session with me. It's in front of you guys, but we're going to talk about whatever you want to talk about. And all you have to do is post in the room, tell me what you see, tell me why you did it, and we'll work through it. And then simplicity. I can't stress this enough. Keeping it simple, keeping it basic, keeping it focused, guys. Of the two platforms, that's the entire plan. Out of two platforms, guys, there are two trades for NinjaTrader. That's it. And learning the first one opens the door for the second one. And there are two trades on TradingView. And there's only three things to get you into these trades, guys. It is a very simple approach. It's a very pragmatic approach. It's a very if-then approach to entering the market. And now I named the room, it's just patterns, because guys, you've got to learn your patterns. You've got to learn what it looks like to have those advantages. You've got to be able to see them, to recognize them, to speak them to the universe, and then turn them into trades. And the second part of getting to where you want to be ASAP is use the spreadsheets that I'm about to give you guys. So there's one for NinjaTrader. It's got rules. It's got what it looks like to have them met, a place to build your plan, even a trade tracking sheet. And then for TradingView, it's got the rules and what it looks like to have them met, a place to build your plan, guys, and a trade tracking sheet. And these spreadsheets do nothing more than create recognition through repetition, guys. One of the other things that it doesn't say on here that I really want to stress to you is the more times you take a picture, the better you annotate your pictures, the more you talk about what you see, why you did it, where you did it. What happens is you're creating this little neurological connection between what your eyes see and what your brain thinks. And that annotation process, guys, makes chart readings darn near instantaneous. Um, So before we get into the rules, before we talk about the indicators, guys, I am going to drop in the room spreadsheets for both platforms and trading plans for both platforms. And my promise to you guys every morning is that I will give you everything that you need to be successful with the software. You will have rules. You will have the ability to get feedback on everything that you do, everything that you see, every question that you have. And guys, you're handed a plan that isn't just me hoping you guys can find a trade. It's a plan that I've tested, that I've helped write, that we have proven when you follow the rules creates an edge. And that edge is knowing first for the high probability trend trade that when these rules are met, this is a trade that typically wins 70 to 80% of the time. And all this does is put you into the market, gets you into the best of the best entry, because great entries create manageable trades. So we're going to go through high probability trend trade has 3 rules. Each rule, when met, creates an advantage. It's my hope that every time you look at a chart, every time you look at NinjaTrader, you say, I have the advantage of momentum. I see that the path is clear. Let me go define my entry, because that's the reason to take the trade. These 3 rules only take 2 charts to come into play. Your large chart, the workspace, has 2 charts. The one on the left is a 13-2. It's a large chart. It's a very slow chart, guys. It's a broad moving, broad stroke of a brush, very slow moving, difficult to see change on. And it only takes the most current bar, the first bar printing, the right edge, will define direction, momentum, and areas. Your advantages that get you even looking for an entry take place in this one bar. And rules 1 and 2 are met through the first bar. Your small chart is an entry chart. It's a refinement chart. It is taking that one bar and just taking an x-ray of it from the bottom of the bar to the top of that bar. All of this movement happens within that bar, and this is how you're going to pinpoint your awesome entries, guys. This is how you are going to reduce risk. This is going to allow you to maximize profit potential. So it's only 3 rules, and it's only 2 charts, guys. And we use 2 charts. My favorite analogy, who are you trading with, and who are you trading against? Your large chart is a conglomerate of badasses. These are the men and women that move the market. These are the men and women that create trends. These are the men and women that establish momentum, that react at areas, and the large crowd typically wins. Your high probability trend trade rules are designed to keep you in the loving embrace of the large chart and never fighting what they want. Now, your small chart, this is where the ne'er-do-wellers dwell, guys. These are the fighters. These are still more powerful than you'll ever be, and they create what's called a retracement. And I like to define the retracement because a retracement is a small move that is counter to the underlying trend. So it's not a trend reversal. It's not a change of direction. It's just a small move that goes against everything the large crowd wants. Well, the small crowd fails in their retracements, typically 70 to 80% of the time. So we're going to use a small chart to define their failure point through rule number 3. And when the large chart gives those first 2 advantages, and you enter the market where the small crowd is most likely to fail, what you have done is you have entered on a pattern that you can prove wins more than it loses. Indicators. These are the tools, guys. This is your hammer. And you can buy the most expensive hammer in the world. If you don't learn how to swing it, you're probably not going to build too much. So first, there's areas. Both charts, guys. Keep it simple. You don't have to know how to build a watch to tell time. Just learn the names. There's divergence highs. When the buyers are in control and the sellers take over and rob them of momentum, you'll see a divergence high line, a magenta line. It's just a loss of momentum in the move. If the sellers are in control and the buyers steal their momentum and push it back up, you'll see a cyan line. Divergence is synonymous with loss of momentum. You're going to see Fibonacci resistance, Fibonacci support, yellow 1-to-1s, and this is a mid band, and it changes color depending on where price is. If it's green, prices above it, it could behave as support. If it's magenta, prices below it, it could behave as resistance. Areas are essentially horizontal lines on both the large and small charts. And then you'll have triggers on both time frames, guys. And there are small triggers. Two solid lines work together to create the small triggers. They're a fast moving average. And then there are large triggers. Two dashed lines work together to create the large triggers. They are a slow moving average. Triggers will work together for you guys. They will define momentum, that first advantage. They will be used to define termination conditions, making sure you have a clear path. And your large triggers will define your amazing entries, where you'll be able to pinpoint right where the small crowd is most likely to fail. Guys, triggers show up in everything that we do, and the only thing that you really need to know is that these are small and these are large. So now we're going to go through and break down these three rules. We're going to look at them individually, guys. And every time you look at your large chart, I want you to start the process. Ask yourself, what direction is the market going? Do I have the advantage of momentum, guys? And if you can't answer yes to that question about rule number one, there's no reason to go to rule number two, not as a brand new user. So we're going to define momentum. It is one look. It is trigger lines. It has nothing to do with Fibonacci, with one-to-ones, with divergence highs and lows. It has nothing to do with these price bars. Trigger lines is one look, guys. It is separation between small and large. So when the background is green, the market is in an uptrend. When the background is red, behind that first bar, the market is in a downtrend. And the path of least resistance is to simply say, I'm only going to look for rules to be met for high probability trend trades long to go with that uptrend, or down short with the downtrend. So the strong trigger look, it's the same look every time. Your small triggers, two solid lines, will break above and away from the large triggers. And it's the space that's created between the two. And I want you to picture scissors that are open and ready to cut. When you have space, that is your strong trigger look. In a downtrend, the smalls are below the large. The space between the two, that's what lets me know that I have strong triggers. And once again, it's like scissors that are open that can cut, guys. When scissors are open, you can get the work done. They can cut you a check. Thanks, Jerry S. And when I have those open scissors, when there's separation between the small and large, the odds are favorable for the market to continue in the direction of the trend. The odds are favorable for the large crowd to continue pushing in the direction of the trend. And strong triggers, those open scissors, you're going to look for those to help you break Fibonacci areas. When the strong triggers are present, guys, that's when you're going to go to rule number two. And when your scissors close, when the small triggers work their way back inside of the large triggers, guys, when there's no longer space between the two, this is what we call weak triggers. And weak triggers, anything can happen up or down. So it's no secret, and if you're brand new with me, you're going to find that I'm a huge fan of attaching language to looks, guys. So when I see separation, my brain instantly thinks odds favorable momentum. The odds are favorable for the market to push up. When I see the separation go away, I think to myself, weak. And weak is the opposite of strong, and anything can happen up or down. And guys, there's only one phrase that gets me excited looking for a trade. And this is the most current bar on the S&P. So all of my new users, if you're brand new with me, AI, Chris, Amika, guys, do you see that the smalls are above the large, that there is in fact space between? And guys, that's your best of the best look. That is rule number one met in a live market right in front of you. And because rule number one is met, and only because rule number one is met, will we go and look for rule number two. I'm going to encourage you new users. I certainly can't force you. But when I say silly little things like, hey, does that make sense? If it doesn't, say no. It's okay. We'll find a new way to say it to help it make sense. Rule number one gives me a market that's going to be difficult to stop. Rule number one gives me the push that I need to feel comfortable that Fibonacci areas have the potential to break, guys. Rule number one is even going to cover some of the mistakes that I make. But rule number one is only 1/3 of the rules. And it's important that you remember this. It's only one of three advantages. Rule number two is going to help me make sure that I have room to targets. Rule number two is going to help me make sure that my path is clear. Because when rule number two isn't met, no matter how much you wish in one hand and poop in the other, only one of the hands fills up first, guys. This is what happens when you trade into a termination condition. It's a comical little look. You are more likely to get stopped. You are more likely to lose trades. You are more likely to not collect $200 and pass go. So we have to be able to define a termination condition in order to stay patient, to give ourselves that advantage. Termination conditions defined on the large chart are simply horizontal lines, guys. This is where the large crowd is most likely to make decisions. And you know about them sometimes hours before the market ever reaches them. Fibonacci resistance, divergence highs, and yellow one-to-ones in an uptrend can all behave as an area of resistance. Fibonacci support, yellow one-to-ones, and divergence lows can all behave as areas of support. And these are areas where buyers buy, where sellers sell, where fights happen, and untradeable bounces occur, and reversals are most likely to come from. So in order to define a termination condition, in order to recognize in the moment that rule number two is not met, that I need to sit on my hands, do nothing, relax, embrace the 90%, we're going to start by letting the large crowd get to the area. Price reaches the area, guys. When price, dynamic Renko bars reach the area, you are done with price. You no longer need price. Price is irrelevant the moment it gets to the area. Hey, Cav, good to see you. Your trigger lines will tell you everything that you need to know about that area, guys. And if none of your triggers break through Fibonacci resistance, if none of your triggers make it through Fibonacci support, guys, this is your termination condition look. And in a live market, look over here to the right, that's your termination condition look in the moment, guys. And if you are not already into position, already making money, already in the profits, rule number two says absolutely no trades into that area. No matter what the momentum is, absolutely no trades into that area, because that area could create a bounce. That area could create an entire reversal, or that area could break. And you'll never know what it's going to be, guys. You'll never know if it's going to break, if it's going to hold, if it's going to bounce, if they're going to fight, if it's going to reverse. So rule number two is designed to keep you patient. Rule number two is designed to keep you from trading into that area that could stop the market. Is everybody good with that? Pretty cool, right? It's not hard. You've got to take that termination, and then you've got to learn to trust it. Areas break. Areas break all day long. Areas break all night long. Areas break in every market, guys. And your trigger lines, once again, will tell you what to expect. So I added these into the PowerPoint. I think they're a great visual of what it looks like for support to first be a termination condition, because price reaches support. Learn that phrase. All of my triggers remain above. Wait to see what the reaction is, guys. You're not in charge. You never will be. They don't send out memos. They don't send out text messages. You have to assume that it's either going to reverse or break, and you'll never know. If your triggers begin to smash through, guys, small triggers start blowing through that area, and you have strong triggers, this area now has the potential to break because of that strong trigger look. So if you fell asleep during class for momentum, guys, you're going to have trouble recognizing the potential. Your best of the best look as a brand new user, highest probability way to take a trade with the potential to break is if 3 of the 4 triggers have already gotten below support. The plan that I give you says that 3 of 4 must be below and it must have momentum. And then once both small triggers and both large triggers, 4 trigger lines have cleared support, support is now broken, guys. The path is now clear. Support will behave as resistance. And guys, your path remains clear all the way until you hit the next area. And once you hit the next area, it's right back to number one. Does that make sense, everybody? First, it's a termination. Every line you reach will be a termination for a moment. If you're not already in a position, it just says, hey, wait for the reaction. Then you'll have the potential. It's only potential. And then you'll get that clear path until you reach the next line. In an uptrend, it's no different. It's just going the other way. First, it's a termination. All the triggers are below. Sit on your hands, relax, do nothing, fix a sandwich, toast a bagel, pet the dog. With momentum, it has the potential to break. 3 trigger lines through that area of resistance is your best chance of success taking these medium probability trend trades. But once all 4 trigger lines get north of resistance, resistance behaves as support, your path is clear and your path will remain clear until you reach the next area. And guys, all you need to do is count triggers. And if you go back to a live market, I want you to see how effective these rules are. Price reached Fibonacci or divergence high. None of the triggers broke. And look what the market did. No long trades, no reason. It pulled back to these yellow 1-to-1s. None of the triggers broke. Look at the untradeable bounce. All the way down to Fibonacci support, and it did almost break. The divergence low didn't even come close, neither did the 1-to-1s, and sure enough, huge reversal all the way up to Fibonacci resistance. No triggers break. Huge reversal all the way down to those 1-to-1s. This is what I would call an untradeable bounce. And then they come back to the divergence low. None of the trigger lines get through. And sure enough, there's a reversal that has provided us odds favorable momentum. And does everybody see the potential to break? Everything behind me is irrelevant. The only bar I need to define momentum and path, well, I guess it takes a couple, is the most current bar. I have momentum and I have the potential to break. Does that make sense, everybody? That takes a lot of the stress out of chart reading out. Just looking at the most current bar. And once you see it, momentum, potential to break, you can go look for an entry. But I want to remind you guys, I added this one back in too. And this is especially if you've never traded futures, if you're brand new to day trading, if you're the type of person that sees movement in the market and feels like they're going without you and not giving you any money, guys, there's going to be times when your path is not clear. There's going to be times when there's stacked areas. There's going to be times without momentum. And guys, this is 90% of your day. And I can't stress this enough. This is 90% of your day. Be patient. The futures markets trade an average. Futures markets trade an average of $220 billion hourly exchanged. You don't need to be in every move. You don't have to catch every tick. You don't have to be the first one in. You don't even have to be the last one out, guys. The highest probability trade that you will ever take, the best of the best, will have momentum. It'll have that clear path. And these tails on a large chart, guys, these wicks, these shadows, I don't care what you call them. Doesn't matter. Call them Bob and Steve if it makes you happy. But you're going to pinpoint with rule number 3 precisely where those tails are most likely to form. You're going to be able to use those tails to study. And guys, rule number 3 is designed to give you unparalleled accuracy and the least amount of risk and the highest probability of success. Because when you have momentum and when your path is clear, I can't stress that enough, you're going to use a limit order to buy or sell a pullback at an area inside of triggers, guys. And that language, that phrase is the recipe for success at pinpointing entries. You are going to use a limit order. And a limit order means that you're going to wait for the market to come to you to buy or sell that pullback, that small movement counter to underlying trends. You're going to do it at an area, at a fib, at a mid band, at a yellow 1-to-1, because the same way on a large chart these areas could just shut down a trend, they tend to shut down the small crowd and create a bounce. in the direction of the large chart advantages. But here's the most important part of that phrase. You're going to buy or sell a pullback in an area inside of triggers, guys. Triggers are just moving averages. There is a mathematical phenomenon, bewilders the experts. Not really. It's called regression of the mean. And it means that when price breaks away from a moving average, it tends to come back to that moving average. Your trigger lines on the small chart, you have large and synthetic. They're just large triggers from both time frames. Your trigger lines will define right where that retracement is most likely to go. So buy or sell a pullback at an area, but demand that that area is inside of triggers, guys. That's where the accuracy comes in. And the tighter those large and synthetic are, one on top of each other, the smaller the area to put a fib midband or one-to-one inside of is, which means that this is going to give you the least amount of risk and the highest profit potential. And again, it's just a pattern. This is your entry pattern for a long trade. On the large chart, you look at it, the background is green, and you say, okay, I am in an uptrend. Do I have momentum? And if the answer is yes, there's still separation between the small and large, you ask yourself, do I have a clear path? And if price has not reached anything and your triggers are above the previous area, guys, your large chart is done. We don't need it anymore. We're going to go to the small chart, and this is your pattern. And if you learn that phrase, buy or sell a pullback in an area inside of triggers, you go from waiting for a reversal bar to begin the pullback to calling your shots 20 bars before the pullback ever starts. But we're going to use the reversal bar, guys. This reversal bar is the beginning of the pullback. It's not a reversal in the market because trend is defined on the large chart. It's really just a loss of momentum that gets us back to our amazing entry. The reversal bar begins the pullback. It is not your entry. When it prints, you can say with the utmost confidence, the market is most likely to retrace somewhere from the top line of my large triggers to the bottom line of my large triggers. Trigger lines will define the retracement zone, but trigger lines are about as bouncy as clouds are to an airplane, guys. You need an area. Fib, midband, yellow one-to-one. No area is stronger than the other. No area is more important than the other, guys. You just need an area because areas behave like a brick wall. And that brick wall is where the market is most likely to bounce. Sometimes there's multiple areas. Sometimes you may see a couple fibs, a yellow one-to-one and a midband, and you'll have a high level and a low level. Well, that creates a window, guys, and I call it the window of opportunity. And when you learn this methodology and you do have a window, you're first going to say this market, that retracement could push all the way to the bottom of these triggers. That's the low end of the retracement zone. And you could say it might bounce from that midband inside of triggers. And you might say it could bounce from that lower point. And once again, the same way you never know how a termination condition is going to react, you don't know which level it may go from. It could go from either. So your job, because of the large chart advantages, is to activate a limit order and wait for the market right there, a tick or two above the highest point of support. And this is your entry pattern, and that is your perfect entry, guys. And that entry, when the rules are met, is an entry that typically wins 70 to 80% of the time. And because you can define where the retracement is most likely to go, because you're now hyper aware where the market is most likely to bounce, I want you to learn to ignore any areas beyond the triggers. In a long trade, any areas below the triggers, guys. This is where the market shouldn't go. This is where the advantage of rule number 3 is no longer in play. This is where the small crowd has made it through every good thing you rely on for an entry. There are no entries for the high probability trend trade taken from below the triggers because you will never know if, when, or where that market is going to continue up. In a downtrend, reversal bar begins the pullback. It's not the entry. You will define where the pullback is most likely to go. Using the trigger lines top to bottom, you can define where the market is most likely to bounce, where the trend is most likely to continue using the areas inside of triggers, guys. So there's that magical phrase again. I will sell a pullback at an area inside of triggers. Get used to writing that on your chart. You're going to activate a limit order a tick or two below that lowest point of resistance. Anything beyond the triggers, and that means that you have gotten beyond the retracement zone. It means that you are through the areas most likely to create a bounce. This is where the edge is gone. This is where the advantage is gone. This is where the market should not go. And Sergio says, Mark, sometimes it happens to me that you place the order at the areas and the market just keeps going, right? It just keeps going down. Never gets you. So you're saying that you don't get your entry. Is that right, Sergio? You do get your entry. And then you lose? This would be easier with a picture. This is why talking with pictures. Okay, so let's do this real quick. Sergio, I think you'll like this. And you know what? I don't even need to do that. Let's go to this one. And I want to show you something, Sergio. And this is important. It is. And thank you for saying that. So I want you to see something. If the market is most likely, right? And Sergio, we're describing a pattern. I'll just do this. We're describing a pattern that you can prove typically wins 70 to 80% of the time. This is the saddest part for new traders. And guys, this is just math. Anything that wins 70 to 80% of the time, it must lose. How often? Sergio, how's your math, brother? If something wins 70 to 80% of the time, does it make sense that just because of math, it has to lose 20 to 30% of the time? It's a cost of doing business, guys. It's like paying rent. So Sergio, there's a way to keep these numbers a little more intact. And the idea is that if I have momentum, and let's just go this way. If I have momentum, if I have at least 3 triggers through, if I enter at the area inside of triggers, with this pattern, that is the most likely outcome. But with this pattern, Sergio, $20 to 30% are going to lose. Now here's the kicker. Are you guys ready? I will never know if my trade will win or lose. I never will, guys. I'll never know. I got to avoid saying things like, I need a win. I have to win. This will win. I can't lose. All these things, guys, all you're doing is you're creating emotional pain for yourself. You will never know if your trade will win or lose. But what I do know is that if I am consistent with the process of entering, I am more likely to win more than I lose. Does that make sense, Sergio? Guys, trading is about probabilities. Trading is about recognizing and describing and being confident that the pattern you're trading wins more than it loses. And if you think that you can predict whether you're going to win or lose, guys, all you're doing is you're setting yourself up for heartache. All you're doing is you're setting yourself up for pain. But what you can do, Sergio, is check this out. I can say that with momentum, right, with the potential to break, and there is, holy crap, 1, 2, 3, 4, 5, 6 hits off of a mid band that continued up with odds favorable momentum and the potential to break. And then the final one where that loss of momentum came in, third loss of momentum, right from a 1-to-1, that's where it failed. And that's where the advantage was gone. So it's not about hoping that it wins, guys. It's about literally being able to look at a market and say with no hesitation, with absolutely no doubt in your brain, that if I have momentum, if that area has the potential to break because of that momentum, does everybody see how I circled the tail? This is how you're going to study. Scroll back. Where is that circle? There it is. The market pulled right back to an area inside of triggers and continued down. And then the market pulled right back to areas inside of triggers and continued down. And guys, this is nothing more than a pattern. It's nothing more than something that's predictable. If price reaches Fibonacci support and all of the triggers remain above, that area could stop the market. And guys, do you see how that area did in fact stop the market? It did in fact create an untradeable bounce. Amika, do you see it? So guys, trading isn't hoping things win. Trading is being consistent in having an edge. And if you go through this process and you learn these rules individually, making sure that you can define momentum, that you never hesitate and you look for that separation between the small and large, and you ignore weak triggers and choose not to trade, and then you go through the process. I will define termination conditions if I have a clear path. Then and only then will I enter the market. Sergio, you can say, I have a high probability trade. This is a trade that's likely to win more than it loses, but this is a trade that will lose from time to time. And my amazing management, my ability to understand where my advantage is no longer in play, is going to minimize my losses. And my understanding that momentum typically pushes a market is going to help me maximize my profits. And guys, that is day trading. And the pattern that I just presented, there are over 500 looks at that pattern. And guys, if you click on them, watch this. If you click on those patterns, momentum, path, entry, down to fibs. This particular trade was taken in the December contract of the S&P in 2022. And it's the exact same pattern. And there's the checklist that is on your list. It's on the plan that I gave you. Guys, it's about consistency. It's about focusing. And then Sergio, because man, I don't ever want to make you guys think you're going to win every trade. Check this out. Steve, there is no automated trading room. You can go to Traders Chat. Let me get you a link to it real quick. And very often there are people over there that discuss the automated system. There's a lot of users of the automated system over there. Let me get that for you real quick. You're welcome to post any discussion over there. There you go, Steve, right there. But there isn't a specific room for the automated system. John sent out an email saying that there was today. Yesterday he took over my class at 10 a.m. Let me ask him if he's doing it again. One second. Sometimes my brother and I don't get those conversations in the evening like we used to. This would be it, Steve. This would be it if he's going to do it. I'm not sure. He finished yesterday and nobody had any questions. And I'm not sure that he decided to do it again today. So as soon as I get an answer, I will relay it to you in the room for sure. And then, guys, one thing I want to show you. Perfect trade didn't work. So even Trina's in the room. So we'll show Trina's trade. Where Trina had momentum. Tech, Steve. Get with Jason and Tech. Put in a ticket. Guys, one of the great things about Nexgen is we have the greatest tech department ever. Get with Jason. Let him get on your computer. Let him take a look at your settings. Make sure you have your ATM strategy in place. That's one of the most common reasons that it doesn't take a trade. But get with Tech. Let Jason get on there. Let him work you through it. For sure. Or you can go to Traders Chat. Show a picture of your settings. Somebody may see something right off the bat that doesn't look right. But one of the biggest things is no ATM strategy put into the strategies. That's what I've seen probably the most consistency with, if you want to check that out. Sergio, this picture's for you, brother. Do you see the momentum? Clear path, perfect entry, got stopped out. Just because you're trading the method doesn't mean that you won't lose on occasion. It just means you don't know, so you better do the same thing every time. Thank you for bringing that up, Serge. Yo. But there are losers in here because it's still the same pattern. Still the same pattern. Oh, there's John Novak. He's going to come say hi. All right, guys. That is Ninja Trader. I have momentum. My triggers are through. There's my pullback to the area inside of triggers. Whoops, I accidentally sold. That is the most likely spot for a bounce if the area is going to break. That's the pattern we just talked about. Of course, I went the wrong way. Stop goes where the market shouldn't. Profits are in place. With this momentum from that great bottom, this is where the market's most likely to bounce. And now I've got no control. It's either going to work or it's not. It's either going to go up with all that momentum and room to targets or it isn't. And guys, that is exactly what we just talked about. And now we're going to talk about it on TradingView. And TradingView is the second platform. TradingView isn't better, isn't worse. It's just different. You're going to be very comfortable if you are coming from Rinko with indicator recognition, guys. There's still small and large triggers. There's still divergence highs and lows. There's still one-to-ones. There's still a mid-band. But Fibonacci isn't on TradingView yet. So there are supply and demand zones, guys. And there's a company called Chart Prime. And I'm not here pushing other companies. But until I get Fibonacci, I can't imagine trading without it. It's $50 a month. It's a cost for your business of trading. But guys, they're going to behave like fibs. Don't trade into them. It's still just two charts. There's a big chart and a little chart. There's a 15-minute chart and a 1-minute chart. And you'll notice that there's no background colors on my 15-minute chart. You'll notice that there's no large triggers on my 15-minute chart. In the plan that I gave you guys, there's very minimalistic workspaces because 15 minutes is just too darn long. There's too much that could happen in 15 minutes to have a slow moving average calling shots for me, or for allowing the background color to tell me which way to go. You will still use your large chart for direction, momentum, key targets, and terminations. Your small chart is a faster chart, and it's going to define the immediate strength using trigger lines, and it's going to define your entry points using areas, guys. Same as Ninja Trader. Big crowd wins. Let them tell you which direction you're going. Let them tell you that you have momentum. Let them tell you that there's room to targets. And then go to that small chart to look for an entry. So to read the large chart, it's funny, TradingView, I feel like the lesson goes a lot faster, and I don't know why. Maybe it's because I think there's so few moving parts on it. Guys, if your small triggers are up, your direction is up. I'm looking for rules to be met for trend trades long. If your small triggers are down, my direction is down. I'm looking for rules to be met for trend trades down, for momentum trades down. So the direction of the triggers is the direction of the trade, guys. There are no large triggers. There are no background colors. So unless you struggle with up and down, it becomes pretty easy to stay with in the good graces of the large chart. Now, if you can't tell if it's going to go up or down, if your triggers are flat, if they're lifeless, guys, if they can't decide whether they're going up and down, how are you going to decide if you're going up or down? Let it be distinct. Let it be clear. And then here, most current bar, again, the triggers are up. So I blew up the picture a little bit for the center picture here, guys. The second thing is I want you to ask yourself, where is the current price in relationship to the triggers? Not where did the bar close, but where is the most current highlighted price? And it can only be one of three places. It can be left of the triggers, it can be inside of the triggers, it can be right of the triggers. So in a downtrend, it can be left, it can be inside, or it can be right. And you'll notice that it's all three in one bar. So we're going to go to the most current price, guys, and this is going to define a little momentum. If you are left of the small triggers, this is the strong side of the small triggers. This is your most advantageous momentum look. This is where 1 minute areas are most likely to break. This is where holding for the bigger move makes sense. If I am to the right side of the triggers, I'm on the weak side of the triggers. Guys, the weak side of the triggers is where reversals have the potential to come from. The weak side of the triggers are where 1 minute areas are most likely to bounce. The weak side of the triggers sets you up for the most aggressive management. And then if you're in transition, if you are neither strong nor weak, guys, this is where you find yourself most often. And this is where I'm aware of those 1 minute areas. This is where they have the potential to bounce. This is where I may take profits at trouble and get to break even, but maybe not exit my position yet. So where you are in relationship to those triggers will help you with your momentum plan, your management plan. It defines the momentum and the push. And then finally, the most important question is, do I have room to targets? Do I have a clear path? So it's a little different read, but first it's direction, then it's momentum, and then it's path. And if I can say yes, I have room to targets, we're going to go look for trades. And there's only 2 trades on the plan, and there's only 3 rules per trade, guys. And the checklists are at the bottom of the plan. Print them out, put it on your desktop, and you'll be floored at how easy trading can be. It starts with nothing in the way on the big chart, guys. I refuse to even look at my small chart if I don't have room on the large chart as a brand new user, because I don't need to hope things break. I'll just wait for them to break or roll. For the trend trade, 1 minute chart must not be trading into areas. The most common losers that I see in this room are people trading into areas, hoping areas break, guys, whether it's NinjaTrader or TradingView. And then finally, there's a trend trade entry that says that you're going to buy or sell a close at an area. Sounds familiar, but you're going to do it on the correct side of the triggers, which means that when the large chart is up, even in transition, as long as there's room to targets, I'll turn my attention to the smaller, faster chart. And the second, the moment, the instant my small triggers roll down, when this chart says up, my job is to look lower. My job is to look for areas below me and wait for a pullback to that area, to that mid band, to that 1-to-1. But I'm not entering right at the area. I'm not hoping that the area holds, because these 1 minute triggers define immediate strength, and that immediate strength is down. Your entry is a close, a bar that finishes both corners above those small triggers. We say close on the correct side of the triggers. Guys, the correct side of the triggers is the weak side of the triggers, where that push has been beaten out a little bit. And this is where the trend trade begins. And then you'll use your large chart to define your management plan as the market cruises up from your trend trade. In a downtrend, small triggers are down, price is on the strong side of the small triggers, There's room to trouble. Now it's time to look for an entry. The second, the moment, the instant my small triggers turn against me, I'm looking higher. I'm looking deeper. I'm looking for a bigger push. And guys, I will wait for the pullback to that mid band, but I will not enter right at the mid band because I'm fighting small triggers. The entry is a close, a down bar that closes on the correct side of those triggers. And that's where your trend trade starts. And guys, this is the most common trade that you're going to take. This is the probably 80-85% of your trades. And then the least common trade, and the one that relies solely on momentum, is, there it is, momentum trade. And of course it begins, no terminations on the large chart, not trading into areas, VWAPs, one-to-ones, mid-bands, outer bands, anything that could create a bounce. Your 15-minute triggers must be on the strong side. That's where momentum happens. And your 1 minute must have strong triggers, separation between the small and large. If the first two rules are met, I will go to my smaller, faster chart. I will allow an area to break, and when it pulls back to that area with all of that strength, I'm going to use a limit order to buy that zone, to buy that HVA, to buy those one-to-ones, and I'm going to put my stop about 5 or 6 ticks below where the market shouldn't go. And all I'm saying is, man, I hope momentum carries this trade up. And in a downtrend, it's no different. First it's down, and then it's strong, and then it's room. And guys, there's your momentum. There's your pullback to the zone. And your stops are tight, and all you're doing is you're hoping. You're hoping that momentum pushes it down. So both platforms, guys, both platforms are 3 rules. Both platforms are momentum, path, and entry. And when I talk about giving you guys everything that you need to be successful, I want to go through it. I have given rules in the form of a trading plan that has a checklist for entry. Everybody in the room has the ability to simulate, guys, and everybody in the room is entitled to feedback. If you want the best feedback, if you really want feedback, guys, if you're on NinjaTrader, I want you to identify momentum, path, and entry every trade that you show me, because my job is to teach you to read indicators, and what you're doing is telling me how you read your indicators. If there's a challenge, we'll address it. We'll correct it. I also want you to define your entry, and I really want you to define it by saying pull back to an area inside of triggers. And what happens is you're telling me exactly how you read your indicators. You're telling me exactly where you enter the market, and you are writing a recipe for success, guys. You are writing a recipe to make it repeatable, to make it testable, to do the same thing every time because you know it creates an edge. If you are on TradingView, I'm not very demanding, but this is where I stand pretty firm, guys. I want you to tell me whether the market is going up or down, where you are in relationship to those triggers, and if you had room. And guys, this isn't for me. I can look at your chart and know in a second. This is for you, building good habits, leaning on advantages, and then I want you to tell me, was it a momentum trade? And if it was, did you actually have momentum? Was it a trend trade? Did you wait for the close on the correct side of the triggers, guys? And if you do me that honor, you'll get the best feedback possible. Taking pictures, annotating charts, learning the patterns, focusing on the process before the money, guys. That's what gets you there. Nexgen provides analysis, rules, and coaching, guys. The greatest athletes in the world have coaches. The biggest mental giants had coaches, guys. Take advantage of having someone that's here live every day to give you feedback. You're going to be responsible for becoming a profitable trader, guys. I'm here to help. But if you're not posting in the room, I can't help you. If you're not taking pictures and filling out your spreadsheet and studying those pictures, watching me on video isn't going to make you an amazing trader, guys. If you're not tracking your progress, recognizing your mistakes, asking for feedback, you are less likely to get to where you want to be in the time you want to be there. So I'm going to take about 3 or 4 minutes, guys, and when I come back, I'm going to click on every chart that's been posted in this room. I refuse to be the trade police. I'm the chart reader guy. So we're going to talk about what you wrote. We're going to talk about the rules, whether they were met. Guys, we're going to high five a lot, and if anything needs correction, we'll correct. And remember, if the rules are met in the second and third hour, and we're watching a live market and we're doing that read and something sets up per the plans, guys, we'll take it live. We'll manage it. But it will be for educational, informational purposes only. Little something for the lawyers, right? Guys, I do not call trades. I do not give trading advice. I do not. Do not. Because trading is an individual sport, guys. What I do is I teach you to recognize advantages so that you can make good decisions. And until you can do it on your own, ask for help. Let me help. Don't sit there wondering. So, my triggers are down. I'm on the strong side of the triggers, but that VWAP could stop a market, which means I didn't have any room to trade. There's no room on a small chart. Guys, there is nothing to do. My large are up, my small are down, my trend is down. I got nowhere to go. That's how quick the reads can happen, guys. There's nothing to do. Whoops, that's my untitled workspace. Let me get over to one that isn't untitled. Not entitled, untitled. And on crude oil, I have strong triggers. I have not yet reached those yellow 1-to-1s. And if the market pulls back, my rules say I will buy or sell a pullback at an area inside of triggers, guys. And there is one spot where this market is most likely to bounce should they give a pullback. I'll let you guys watch it. Termination for the win. I'll be back in about 5 minutes. Talk amongst yourself. Post them if you got them. So I'm going to scroll up to the top, and I am going to click on the pictures that were posted, guys, and we're going to talk about the things that we see and the things that you guys did. And we're not going to play trade police. What we're going to do is do our best to read the indicators, to look for the advantages, to talk about the things that are going right, to identify any challenges that may have been present, not because I want to call you out for breaking rules, but because I want to know that you were aware that the rules weren't met. Oh no, we're getting that where the copy pasted pictures don't seem to be loading, guys. Let me see if I can make this work. If you are able to use a screencast link, please. Otherwise, they are going to be ginormous pictures, and that's okay. But I do all the pictures, and I click all these links initially, guys, because I want to be able to be present in the chat box. So if you have questions or comments or concerns about anything that I'm talking about, I'm able to address it without missing what we're doing. Oops, Victor, I do love a little Earth, Wind, and Fire, but probably don't need to review that. Claire, you've been busy this morning. I love it. And guys, one of the things that I ask of you is if I miss a picture, guys. If I miss a picture, if for some reason I don't see it or I miss a question posted in the room, don't be afraid to repost. It turns out, unfortunately, I am human at times. And at times I will make mistakes and miss things. You need a third breakfast? I love it. Wayne gets us going. And Wayne, I love this. So low momentum, trend is up, perfect read, room to targets. And Wayne, there's your pullback right to the area. There's your close above. There's your entry. And there's your profits. And guys, that's it. That's everything we talk about. When the market is up, when there's room to targets, don't fight, don't fight, don't fight. There's your close above. There's your entry. And there is the perfect trade. Nicely done, Wayne. I like it. Andy Man says, check it out, Mark. When everything is strong and there's nothing in the way, I'm going to get in above trouble. I'm going to make money all the way to trouble. And if it just keeps going, I'm going to get in above trouble and I'm going to get money. I'm going to get paid. Right on. Trina, we talked about most of it this morning, so I don't feel bad about it. He can watch the video if he needs it again, but I think I annotated all of his charts and talked to him this morning as well. But if he does need feedback, guys, if you disappear and I look at your charts and you need to come back and get that feedback, let me know. We'll do it again. But your job will be to repost. All right, 15-minute down, strong side, and not clear. And guys, that's a big deal, right? Not clear. But from 34, it is clear. There is room to get back to trouble. And then, Paul, you take the pullback just about to the mid-band, closes below, makes it right to the HVA, quick cash. Quick cash. The market had already reached its target twice. You took the last-ditch effort for down and were able to capitalize. Nicely done, Paul. All right, let's talk about this one. 15 minutes up, transition, everything in the way, right? Close on the correct side, everything in the way. There are zones, one-to-ones. Large chart says nothing in the way, and you pulled one over on the market. And guys, one of the things that I'll do, and it's going to upset some of you, but you're going to have to work through it. If you get lucky, if you take a trade without strong triggers, with nothing in the way, or with everything in the way, with no clear path, right? Every indicator's down, smalls are even below, and the market goes up for you, congratulations, right? Is that a pattern that's likely to win more than it loses? And that's what I ask. And on a trade like this, Paul, I would have to have you ask yourself, is that your path of least resistance, or is it worth it? And guys, what a great next trade. Triggers down, I believe transition, weak side, nothing but room. And Paul, you take the perfect entry and make beautiful money. And guys, neither trade is right or wrong. One trade has nothing in the way, all the advantages, and I believe it's damn near effortless. In the other trade, you've got to instill a boatload of hope that areas break, that no momentum pushes. And guys, there's an easy way and a hard way to take these trades. Everything is down, price on the strong side, clear skies all the way. Victor takes the close below the triggers, gets paid again. Nicely done. Great to have you back, Wayne. Most of your trades we've already talked about in the room this morning pre-class. I did already review them. If you need to hear it vocally, do me a favor and repost. Strong side, room to trouble, missed the trend trade, and Jen came in and took the momentum trade and was still able to capitalize. Exact look, right? She's like, oh, I missed the trend trade, dag nabbit. But look, it turned into a momentum trade, and let me get paid. Nicely done. Guys, when you know your rules, there is no, I hope the market goes down. There is no, I wish the market would do this. What there really is, hey, Mark, or this is what my indicators say. Here's where my rules were met or not met. And Jen, do I consider the pullback to an outer band valid? And guys, these are great questions when you post these in the room. And my answer to Jen this morning, if I'm trading outside of the outer bands, if I'm in a market that's already pushed beyond extremes, if the only thing I could ever look for is short trades, Jen, very often this outer band can behave as resistance. And of course, you said it, there's no room, there's no reason. But yes, you can. Is it likely to work more than it doesn't? Probably not. But if you're just tired of waiting, you can give it a shot. That's your right. Pullback, 1 minute, transition, nowhere to go with the close below. And if you did take the quick shot, it ended quickly. Nicely done, Jen. And then there's the exact same trade, rather than avoided, taken. There's the entry at 25, and then the market just turns. It turns. And the reason, it had already been where it wanted to be twice. And from that area, look at the trigger strength on the small chart, guys. That's your reaction from that termination condition that just held. It looks like somebody was pretty happy about that bottom and wanted to start pushing it up. And then Wayne, absolutely beautiful. The triggers are still down, but you're on the weak side of the triggers. And guys, remember when we said from the weak side of the triggers, those 1 minute areas are more likely to hold? And it did completely. And Wayne said, with this look from the weak side, with price pulling back to 1-to-1s in a zone, with a close on the weak side of the triggers, well, I can probably capitalize. And it may be the short to get to the long, but there it is. Beautiful trade, Wayne. Awesome trade. For the brand new user, as long as the triggers are down, the plan says you have to go down with it. For the person that's put in the study time, for the person that's been sitting in front of the market, for the person that's watched these patterns, guys, there are moves within the moves that are very easy to capitalize on once you recognize them. And then Wayne, then it starts going up and you go down. You take a quick shot with momentum, but you are fighting the underlying trend. And then when it pulls back and closes above, you go with the trend, and it's an easy big move. Nice done. Wayne, you are in tune with your indicators, man. Nice job. And this was a little management question. And guys, I want to talk about this because management is where the money is made. Management's where the money is lost, guys. And if you're in my room today because you're like, oh, I thought John Novak was going to talk about small chart management, we certainly can. And Wayne, this is the exact same look, isn't it? There's your pullback to the exact same zone. There's your close on the same side of the triggers. And Wayne, you're accustomed to small moves. You're accustomed to Rinko bar, quick 10 ticks, quick $100, and that's, man, you do it well. You really do. I want you to look at something though. And you said that the large chart had already rolled up. If you're in on the weak side of the triggers, and then it gives you odds favorable momentum. Odds favorable momentum is hard to stop. Every chart, every indicator is in favor. HVA is only the first potential spot. And what I ask you guys to remember, and Wayne, I'm going to write this down because this helps with management. And guys, if you're working on management, your large chart read really sets the tone. So if I'm on the strong side of triggers, like I am right after reversal, 1 minute area is more likely to break. And Wayne, that's exactly what you had if your triggers rolled. Not only were you on the good side of the triggers, you also had odds favorable momentum, and it never gives you any indication that it wants to slow down until it gets all the way to the mid-band. And guys, this is one of the things that TradingView does for you, is it gives you the ability to hold for these bigger moves because they're minute charts. And then Wayne, with your same entry here, the same logic that gets you in, waiting for a close on the correct side of the triggers so you're not fighting that immediate strength, because look at it. It would have lost 7 times if you took an entry and fought it. That same logic gets instilled into the management side of it, those strong small triggers. And then most importantly, that strong side from the large chart, oh my gosh, bull in a china shop. Does that make sense, Wayne? Because everything was screaming. Everything on that chart, everything on everything that you owned said up with strength. Those are your big move looks, Wayne. So I encourage you TradingView users, keep eyes on where price is and create some expectations for it, right? If I'm on the strong side of up triggers and I've got odds favorable momentum on the small chart, what on earth is going to stop that market? Well, an area might. I'll get paid at least something, right? This is like stopping 2 car lengths back from the speaker at McDonald's. You knew you were going to get there. There's no one in the way. Horrible analogy, but that's kind of what it is. And guys, management takes time. I can't stress that enough. Management is where we all feel like we have something to lose. Management, oh my goodness. Claire, who is this? That's a lot. Guys, management is where money is made. Who is this? That's you, Pete? Good Lord, Pete. How am I going to read that? So we'll just go to the most current trade. The triggers are up. You're on the strong side of the triggers. You trade directly into a zone. The smalls are below the large, right? That was your trend trade right here. So trading into a zone and lost. Trading from a zone and won. Trading above trouble and won. Trading above trouble and won. Guys, room to targets pays huge dividends. Room to targets. And there will be times in consolidation where these zones are really, really stacked. I was with you, Pete. And I want you to see one thing. One thing that Pete wrote on his chart, and this goes back to our last lesson. Strong side, nothing in the way. And Pete knows, because Pete's an amazing student, that from the strong side of the triggers, 1 minute areas are most likely to break. And because he learned that one lesson, because he studied that one lesson, because Pete now trusts that one lesson, he's willing to take some shots when everything's pointing the right direction, right? Good job, Pete. And I think that goes back to the idea of management. When you understand how you're gonna manage based on that large chart, it makes it a lot easier to start to break out from that very restrictive beginner's plan that teaches you to read your indicators. Um, Rinse and repeat. I love that, Victor. Rinse and repeat. And I apologize that this is so big, guys, but um, we're having some challenges. Triggers are up. Price is on the weak side, so I have to manage on the small chart. The fact that that's the first place your brain goes is brilliant. From your close on the correct side of the triggers, you had tons of room to get to the first trouble spot, and that's where it went. And when it didn't blink because of odds favorable momentum, you took it for another $140. Nicely done. And what a beautiful $385 long. Does that make sense, guys? It's up. He's got room. And because he knows where he's at, he has already identified on the small chart where he's going to have to make decisions, where he may have to take profits, where he's going to let his small chart read dictate whether or not he exits or whether he holds for bigger moves. And then, Wayne, this goes back to the idea, and Victor, this is good for management, with odds favorable momentum, guys. If you're embracing the idea of a runner, and man, let's just see what this thing will do. You could wait for a close on the wrong side of those small triggers, right? On the weak side of those small triggers and say, okay, that's where I'll exit. Or you could even just chase it, right? You get an up bar, followed by an up bar, put it below the up bar, followed by an up bar, put it below the up bar. Really embracing, yeah, really embracing and going through. And I think one of the things that's magnificent about what we do is that when we look at trigger lines and we're like, wow, these are so strong. Arbitrary stops tend to get hit, right? But guys, if you're up $500 in a move and you put a $400 arbitrary stop in place and it gets hit, if you are pissed off about $400 in profits, congratulations, you are an awesome trader. When $400 aggravates you, you are clearly doing something right with your trading. All right, smalls are down, strong side, pull back and close on the correct side of the small triggers. Because they're strong, Miss Claire, you take a chance into 1, 2, 3 areas. And because everything is down, strong side, life is good. Sure enough, down it goes. What a beautiful trade. Does that make sense, guys? When you let the large chart lead the way, the small chart is easier. Can I show you guys something? And Claire, and this is for everybody. Let me bring up my NASDAQ. Do I need this much on the NASDAQ to decide direction and relationship? I don't, really. And guys, I'm old. And I've had LASIK and I'm already about back in readers. Watch this. It'll change your life. Is there any doubt what direction it's going? Is there any doubt that it's on the strong side? Is there any doubt that that 1-to-1 is right there? Pretty cool, right? And the same is true on entries. Guys, if I'm looking for a trend trade, if I'm looking for a momentum trade, I'm looking right here. Do I need 173 bars to know whether or not I have a momentum trade, to know whether or not I have a trend trade? And guys, I think legibility is a very useful tool. And Victor, I'm going to put you on a little bit of a pedestal, and I can still read it, Claire. This isn't me crying about your chart. Guys, there's even a way to make this bigger, to get your timer bigger so that you can see it. But now I'm not focused on everything that was. What I'm really focused on is exactly what I need to take that trade. exactly where I need it to take that trade, exactly the advantages that need to be in place to take that trade, and I'm not distracting myself with 74 bars, right? With 74 bars. And Victor sent me a message yesterday. He said, Mark, all I did was made my entry chart easier to read, and trading almost instantly became more consistent. And then Claire, it's a beautiful trade, but there's a lot of information, and it's harder to see a close on the correct side of the triggers, right? And it's harder to gauge when it's really tight, but you absolutely killed it. And there's the same one, and I love it. Money, money. I like the money sign. And then same thing. Strong side, room to trouble, pull back to the area, close below, and down it goes. And Claire, trend trades are so easy, aren't they? And then downside, your annotations are lacking a little bit. You were the weak side of the triggers. You pull back to the zone. You do get a close below. Because you're weak side, because you're into trouble, I noticed that you took all of the risk off of the trade. Guys, the most successful traders are 32 flavors of boring. The most successful traders do the same thing over and over. And then Claire, termination, triggers roll, smalls are up, and you take the HVA trade and you go the other direction. And guys, this is what it looks like when somebody has a checklist. This is what it looks like when somebody has a plan. This is what it looks like when somebody knows exactly what has to happen to get them into the market. And Claire, you disappeared for a while and I missed you, and you are freaking killing it. The triggers roll, strong side, path is clear. There's your pullback. There's your close on the correct side. And you're just making money hand over fist, Miss Claire. Outstanding. Outstanding. I have to steal all your pictures for the highlight reels today. Claire, you've really done a great job of making it look easy. Leaning on those advantages. Nicely done. Nicely done. You broke your hand. Boy, that's been a pretty long heel, hasn't it? I remember when you broke it and you couldn't type. I'm glad you're back. It's great to see you in the room. I get all giggly, guys. Like, you guys are my kids. You're my family. All right, so we're going to talk about Yoni's chart. Cindy, are you in here? Is he listening? So the large chart says strong triggers, good top, room to trouble. The small chart says we've reached trouble, but there is no divergence. You take the trade directly into the termination condition and you get stopped out. And guys, so this is one, if you were coming in here looking for John Novak's small chart management, your small chart shows you exactly where Fibonacci is, guys. And if the market comes off of Fibonacci, it's okay to not trade into it. Here it didn't reach it yet, and it's perfect, trades right to it, right? Here it didn't reach it yet, it's perfect, trades right to it. And guys, when they get there, it's okay to let it break. So the idea here is, while the large chart looked great, actually it didn't. The large chart was only the potential to break two triggers. The small chart was directly into a fib. This is one of those trades where you could say, you know what, it's all down, the momentum is good, life is awesome, I really want to see what happens here, but I'm going to force them to give me a reversal bar. I'm going to force them to go in the direction of my trade so that I can mitigate that risk a little bit. Great chart, large chart read. I think small chart gave a little opportunity there. Strong, clear path, nothing in the way. And then same thing, there's that reversal right off of a fib, Miss Cindy. And I want you to look at this, guys. If you are a NASDAQ trader, one of the coolest small chart indications that that market doesn't want to go down is those small triggers never turn. And they are so far away from your area inside of triggers, Miss Cindy. I love this look. And when they get back, manage if you need to, right? Take and manage. This is about the only look where I may take a shot at divergence from a fib. Nicely done. Nicely done. And just great money all the way up. And then once again, second lower divergence, everything rolls, odds favorable momentum, absolutely perfect entry, and then making your money. Making your money. Great job, Miss Cindy. Showing the kids how to do it in Miami. I love it. And we've almost made it through all the pictures, guys. Check out this one. Did you see this? That automated system. Oh no, hold on. It's not letting me. There it is. When a termination condition holds, when those large triggers don't roll, when everything goes up, when it hasn't reached trouble, your system says, hey, what a great look to go long. And then John teaches small chart management. And sure enough, it made it right to Fibonacci. And that's where the market started to turn. So, guys, if you are one of those people that's like, you know what? These rules, they're cool. I get it. That is the rules, guys. The automated system gives you the greatest entry possible. And then John Novak and myself in this room will help you with small chart management to get the most out of those amazing entries. I am in love with this system. In love with this system. And everything that John teaches is exactly what has him at over $3,500 in his live account right now. That's a hell of a day, John Novak. Nicely done. You know, you keep this up, I might let you teach in my room one day. Maybe, if you're lucky. We'll see. Let's see what's going on here. And guys, let me know if you see similarities with what John Novak is posting and what I teach. Strong triggers, everything says down, room to trouble, pull back to an area inside of triggers. And it's even supported, if I'm not mistaken, on his range chart, even gives a signal. And guys, he's up $930 before it even gets to trouble. Before it even starts to look at trouble. And he's got such a little amount of risk. Thanks to that bar. John, you're doing all right, man. You're doing all right. Momentum. All the triggers are below. Are you serious? And it pulls back to an area inside of triggers. Guys, I'd say that I can't make this stuff up, but John Novak did make this stuff up. These patterns are based on thousands of hours, thousands of pictures, thousands of patterns. And all it is him saying, let's help some people get to where they want to be. Let's help some people find success in the market because you guys are worth it. You deserve it. Winner, damn right it is. Winners, darn right it is. Winners, you better believe it is. So Andy man, are you telling me, Andy man, that when everything is strong and there's nothing in the way, you have been able to get paid consistently? You've been able to find profits? You're finding a way on a smaller, faster chart to manage risk? Pretty amazing, guys. And John says, Andy, with that much volatility, might think of just putting targets at areas and holding for more. That is the art part of the science. Get paid when they're giving it away, unless they give you reason to exit. Then make it to the target. The same trend trade short as TV on that one. And Victor, rules have created your current record. 23 total trades in 3 days, 19 winners, 4 losses. And Victor, can I ask, are you following the KISS plan with yours? Are you following that super simple approach? Yeah? So you're telling me 82% winners. 82% winners. You didn't have to make anything up. You've got this, and you didn't even incorporate the momentum trade, just trend trades. So, guys, I want you to pay attention to what Victor just said. What Victor said is, hey, Mark, I have a plan that I can prove wins more than it loses. I've stuck to my plan for the last 3 days. I'm at 82% winners and probably on your way to passing evaluations if I'm not mistaken. Great job, Victor. Great job. And Victor, I'm going to air your dirty laundry. Are you ready? Remember when you would look for every move in the market? Do you remember when you would try to take every trade where every tick had to be your tick? What a frustrating way to trade, guys. And Victor, I'm going to raise my hand right now in front of God and everybody. I was the same way. I was the same way. If the market went down, I was angry that I wasn't going down with it. If the market reversed, I wanted to be the first one in, guys. If the market said it could have the potential to break, damn it, I wanted to be in that trade hoping that it broke. And the reality is, and this is such an aha moment that you guys can all have if you learn how to keep it simple. You can literally take, come on, there we go. You can take one look, one set of rules, one checklist, 3 things, 2 charts, and find an enormous amount of success with this software. And until you get there, I'm here for you. I'm here to talk you through what you see. I'm here to talk you through what you're doing. And guys, if you are in the funding company and you're struggling, read Victor's posts. Talk about how easy it can be. First NASDAQ trade in a while, $1,100 winner, triggers down, strong side, got through the outer bands, and you trade directly into the areas. Nope, you get in 185.83. You still have almost 10 points, almost $200 per contract with all of the momentum. And guys, it's like a broken record. Pete starts his analysis with strong side. Strong side of triggers, 1 minute areas are most likely to break. Let's see if we can't find a way to break them. Awesome trade, Pete. Can you guys believe that in this room today, of all the pictures posted, not one loser. Not one loser. I think that's probably a little fictitious. I think there may be some shenanigans. Guys, I'm going to tell you, and I love it. I love it when you guys post winners. I do. I steal them. I put them on YouTube. I show off and I brag about all of you. Guys, losers are where you will get better. Posting your losers, not hiding your losers. Telling me what you saw. Telling me what you did. Jen, that was just for you. Because what happens, guys, is when you post a loser in the room, and I'm going to show you, and I'm just going to do it just like this. When you post a loser in the room, and this is a good example, if you are truthfully annotating your charts, and you say, hey, Mark, I had strong triggers, then the first thing we're going to do is we're going to say, okay, hold on. I noticed that you identified your strong triggers and you felt good about that advantage and momentum. But humor me for a second and let me help you out just a moment. In order to have strong triggers in a downtrend, it's mandatory that there is a separation, that there is space between the two. And guys, it is this look that creates the advantage. And when we look at your chart, and this is my chart because guys, I'll post losers all day long. Do you notice that there's no separation? And this is how the classroom works. If you say, oh, I see it, well, then now you are better equipped to latch on to that idea of momentum. And if you say, I don't get it, if you have that conversation, if you exert that bravery to say, I don't get it, guys, we're going to open up a chart. And we're going to look at, whoops, I guess I crashed. We're going to look at examples of momentum, and we're going to talk about examples of momentum. And I'm going to lead you back to the very basic rules in the spreadsheet that I gave you and say, hey, here's 50 pictures of momentum. Do me a favor. Burn this image in your brain. Because once you understand that separation is strength, you are off to the races. Um, hey, after yesterday's live with JN, you're back in the room, fully committed to the process, refocused, rebuilding, and ready to do the work. I love that, Cam. Then I will do the work with you. And what we're doing right now is describing the best way to do the work. And guys, the same thing is true right here. If you tell me I had a clear path, I may ask you in the room, why do you say that? Like, what did you see? And why am I asking you that? Because some of you and a lot of you and most of us in the beginning say, but Mark, price got below the area. They got below that fib that could create a bounce. And guys, what it does is it opens the door once again for us to go back to talk about the recipe for a termination condition, to talk about the idea that when price reaches an area, we no longer look for price. We're looking at trigger lines to define whether or not it has the potential to break, or whether it's broken, or whether it's more likely to hold. So when you show me entries directly into termination conditions, guys, I am 100% committed to getting you the lessons that you need to make sure that that's not a reoccurring mistake. That's why participation is so important. And then the cool thing is when you do post in my room, and the feedback is into a termination condition, and John's probably laughing hysterically right now, because when I started trading, when I finally embraced the spreadsheet, I probably had about 175 of these before he was finally able to get it through my thick skull. Mark, stop trading into lines that could stop the market. And it was this process right here, guys. Man, if you're skipping these, you're shooting yourself in the foot. Every morning, go back and look at that tracking sheet. Every morning, ask yourself from the previous day, what worked? Like when was I making money? When did it seem easy? When was it effortless? When was I not nervous, right? And then what didn't work? What rules am I breaking? What did Mark tell me over and over and over and over appears to be kicking my ass? If you do that every morning, guys, and this takes 2 to 3 minutes, hand in the air, Scout's honor, it takes 2 to 3 minutes to say, this is what I'm doing great. This is what I need to focus on today to not make the same mistake again. And if you do that, what you're going to find is that when you post this in the room and you don't annotate, and John did it on purpose because John's just posting pictures. I'm gonna go through and I'm gonna show you exactly what you'll get from me. And every time I look at a chart, I'm gonna ask myself direction, momentum, path, and how do I define my entry? And was my entry a pullback to an area inside of triggers? And John says I was trying to win long after up bar because of divergence at the top at the 1-to-1s. This is a red flag without a doubt, right? Don't have the best momentum because the small triggers are against the trade. The large triggers are down. The small triggers are starting to come up, and the 1-to-1s just held. And John says because of this great termination, right? Because of the triggers, large triggers are up, small triggers are above them. Because of my pullback right to the 1-to-1, and then most importantly, because of the continuation look, because the small triggers are up, I'm going to take a shot at the long. And then the lesson here that I would give John, if John were a new student, and what John is doing is saying, Mark, let me give you a lesson. I would remind John that your chances of success go up dramatically if you let those small triggers get back above the large. And John knows that. John knows that rule. John knows that lesson, right? And sure enough, the market did go up, right, John? What it looked like prior to the trade long. It was beautiful. It was perfect. Everything about it was awesome. But the small chart hadn't given it up yet. The small chart hadn't given it. The market was wrong. And we have to let it be wrong every now and then. It's the perfect trade, John. I mean, everything about it is beautiful. The only thing that you don't have is the area inside of triggers. None of them held. You get in on the good side of the smalls, and it just needed a second to get its bearings to want to go back up. That's it. He knows all this, guys. Followed his rules, doesn't matter what happened. I love it, and that's not a lot of risk. But does that make sense, guys? Even John Novak can post in the room, and I can say, hey, I see a challenge here, and he knows. I'm not going to teach John anything he doesn't know. He was my mentor. He's still my mentor. But what John said, and this is the most important thing, I followed my rules. I followed my rules, so it doesn't matter what happens. I know that my rules produce more winners than losers. And John Novak, great job. All right, Pablo. Pablo says, Mark, I'm not going to annotate charts for you. You can't make me annotate charts. That's not my job. To which I reply, Mark, you're blind. He did, and he annotated them over here. Good entry on the pullback. Close below triggers. Using the language, right, Pablo? Using the language. What was your large chart read? Large chart was down, strong side of the triggers, room to trouble. Strong downside of the triggers, room to trouble, Pablo. You patiently wait because the small triggers turned against you for the pullback to the area, the close below, and you take quick profits. 6 points. Nice. $100 quick shot. And then, Pablo, you're like, man, I could have made so much more money, right? So let's look at one thing, Pablo. Are you ready? And Wayne, this goes back to yours. You said I missed one of yours. I'll get it. Sorry about that. It's never intentional. Strong side of down triggers. 1 minute areas are most likely to break with this look. Does that make sense, everybody in the room? When the large chart says strong down, so here's one of the things. You could say, if you wanted, and you're looking at the HVA, right? You're looking at that HVA and you're saying, all right, that's an area that could create a bounce. I'm just going to get paid, wait for the next trade. Nothing wrong with that. But the next area is down here at 10, 9 points lower. The next thing that could even hint at being a solid big bouncy spot is all the way down here at 10. John said it once. When everything is perfect down, ignore uplines. And he said that about these HVAs. When everything is 100% ideal for down, when the strength is there, when the path is clear, when the entry is perfect, when the risk is minimal, when the small triggers are down, you're on the strong side of the triggers, guys, that's when you can start holding for these bigger moves. That's when you can really start to capitalize. And Pablo, look at your small triggers. They are vertical, right? Heading down. And they just kept getting better and better and better. And then it hits an outer band all the way down here at like 90. And guys, $100, again, if you're mad about making $100 in 8 seconds, congratulations. You're an awesome trader. If you're upset that it was only $100, think about that. Could you imagine being 8 and saying, I only got $100 today? I was walking down the street and I stepped over $100 bill because why on earth would I waste my time for $100? So what happens, Pablo, if you take that $400 shot 4 times a day, right? Quick in, perfect entry, out, that's $400 a day. That's a 6-figure income. That's a FOMO watch. And guys, FOMO, fear of missing out, happens when you don't have a plan. When you get into a trade and you hope it works, you're more likely to get out early. When you get into a trade and you're not looking at the advantages, you're only looking at the dollar signs and you're looking at your stop loss. Does anybody look at their stop loss and think, oh, shnikes, I sure hope it doesn't hit it. I hope it doesn't go to my stop. I hope it doesn't turn around. What if it does? Oh my gosh, I better get out. Guys, that's emotion. That is a trader's worst nightmare. What if you said, I have the perfect entry and my indicators say this market is more likely to go down as long as it doesn't close on the other side of those triggers? You start holding for bigger moves. You start ignoring little fluctuations. You start embracing advantages. And guys, that is so hard to do as a brand new user, but great entries make it much easier to do. Much easier to do. All right, Wayne. Loss, wins, 3 wins, 1 loss. Cool. Was watching this when it closes below the 1-to-1s. Why? Was it because your triggers were down, because you were on the strong side of the triggers, because there was room to trouble, Wayne? Yeah. So Wayne knows that, right? Wayne, write it down. And if you're brand new, guys, write down why you're getting in the trade, because what it does is it keeps you focused on that look. So let's look at the small chart. Coming off of 1-to-1s when everything says down and you bought, that's your right, and you get out at trouble. Quick profits. And Wayne, down strong room. Down strong room. You don't have momentum to just jump in, right? This is counter trend aggressive. This is hyper aggressive. And that is the short or the long to get to the short. You don't have momentum pushing this. It's just hard. And then when you lose, you say, you know what? I'm going to try it again. Or did you go short? Did you say that's the wrong direction? Wayne, that's your trade right there. That's your short on the pullback to the area with the close below from the strong side with nothing in the way. And Wayne, it doesn't even blink. Doesn't even blink until it gets there, right? That's the easy one. And guys, it's not my job to tell you how to trade, but what I will tell you is that if you're fighting this chart, Wayne, when you fight the large chart, guys, you're less likely to win. And then the hardest question that we ever have to ask ourselves, and guys, I come at this from the new trader mentality. And I'm just going to use your chart, Wayne, and I'll even cover up your trades. But I want to type this out because I think when you type things, it begins to register. Do I need to go counter and fight the large chart to hit my goals? And Wayne, if you're going counter from an area, from a termination, waiting for a close, it makes sense, right? But if everything says down, do I need to go up? If I don't have momentum pushing a trade, do I need to hope that the market magically goes up because I see 1-to-1s off in the distance? And very often, guys, the answer is no. And we get these revelations that you don't have to be in every move, that there's an easier way to do it. And Wayne, you are an outstanding trader, and I'm not doing anything to knock down what you do. But avoidable losses for the new user are one of the biggest reasons we don't hit goals in times. One of the biggest reasons we have to sit in front of the market for 8 hours, because every time we take a great trade, we tend to undo it with a bad trade. And the more you focus on the best of the best, the less likely you are to give money away that you shouldn't be giving away. Week top, everything says down. You do have a clear path. Strong trending market. And Trina, you're just selling the mid-band till it doesn't work. Is that right? Over 30 bars in the same direction. Absolutely nothing in the way. There's only one challenge with this one, Trina. Did you know that reversal bar kills your strong trending market. So momentum is off the plate. So let's talk about how smart you are. Trina says, I've got a clear path. I can't define my entry. And I'm not just going to jump in at a mid-band. What I'm going to do is force the market into a reversal bar because now it gives me someplace to put my stop. I don't know why you guys count on a mid-band. All it is a little squiggly moving average, right? But Trina, you said with everything down below areas, the market's more likely to go down. Let me force it to go down so I can manage risk. And I noticed that you didn't hope that it kept going without momentum. You got paid at trouble. I love everything about this trade. And Trina, it's your understanding that areas that are not inside of triggers, it's not a trend rule, because once you get beyond those triggers, who knows if, when, or where that market's going to stop. So you force the market to go back in the direction of the large chart. I love everything about this trade. And then you're not holding for home runs. You're just getting paid. Nicely done, Miss Trina. I'm all about celebrating victories, guys. Boaz. Strong triggers. Nothing in the way. Pull back. No areas inside of triggers. So wait for the bar. Place to put your stop. And then, guys, if you are using the auto system, if you're paying attention to John Novak's management, this higher divergence right here, Boaz, and it prints about right there. This is an awesome reason to go ahead and get out of that trade, take a couple ticks. And then if you get a reversal bar, you can always re-enter. But a second higher divergence very often pushes that market higher. Even when the large chart says it's screaming down, a second higher divergence from a pivot, second lower divergence is just a little small chart indication that they may start shoving things just a little bit further up. There is no gap. There is no gap, Wayne. The gap is when it hit the mid-band and the large triggers are a full bar away. It's not, the mid-band does not suck price to it. Does that make sense? That's your gap right there when it comes up and reaches and comes down. Yeah, but he was already out of the trade by then. Oh, Wayne's saying, I see what you're saying now. It took me a second. Wayne's saying from a bad bottom, hits a mid-band, large triggers full bar away. Wayne's in on a reversal bar, looking to close the gap to those triggers. I see what you're saying, Wayne. Boaz, does that make sense? Second higher divergence is a nice indication that things may be changing. Awesome. John Novak, everything set up. Strong trending market, nothing in the way. Pull back to support. And you enter, it looks like right at support. Nothing in the way. And you've got, I'm trying to figure this out. You're in 11 and you've got one here. You're willing to take 10 off if it goes below, but you want to stay in on a runner, so you've got one stop even lower. And the worst you can do on this trade is $2,000. The worst case scenario for this trade is a $2,000 winner on those, and then giving back $200 if it comes all the way down. Nice job, John. And then your exit, let's see what his exit was. When the market gave divergence from a 1-to-1, he chose to no longer stay in the trade. Small chart management. My goodness, John. And I love this. Still amazes me. I wrote it 30 years ago. Direct from Fibonacci support all the way to Fibonacci resistance. Outstanding. Guys, remember when I told you, if you learn how to read your charts, If you learn how to read your charts, you're going to be able to recognize three things. You're going to be able to recognize where the market is likely to stop. You're going to be able to recognize where the market is likely to continue. And on this one, it would have been, well, actually, that's likely to continue. And you're going to be able to recognize where the market is likely to go. And you're going to be able to take these three very basic concepts that are a byproduct of your chart read and turn them into potentially really profitable trading, guys. And again, I'm going to say it, it's all dependent on your ability to recognize three very simple advantages. To say to yourself, if I have momentum, if my path is clear, if I can define an entry, and it doesn't have to be a high probability trend trade, can I define an entry that wins more than it loses? I can take a trade. I have an edge. The advantage is there. Life is good. And then once you get that foundation, this is crude oil. It's crazy how you say, okay, no more short trades, even with momentum, right? And check this out. When that termination condition reverses the market, gives you odds favorable momentum, there's that tail. What did it look like? Do you guys see the pattern? So Licanudo. Who else is new in here? Who's evaluating the software? Who's wondering if we're full of beans? I want you guys to recognize this pattern right here. And every time you look at a chart, I want you to say, oh, we're going to just do an entry together. I want you to say, what direction is the market trending? Is it red or green? What do you guys think? Is the market up or down right here? You have to be able to answer this question to have an edge. It's going up. Thank you, Jeffrey Dean. And now the second question. Are my small triggers above and away from my large triggers? Is there space between the two? Do you see the space, everybody? You can say out loud, scare your cat, the odds are favorable for this market to continue up. And then you just have to ask yourself, has price reached an area? Has price hit a horizontal line on my large chart? Does everybody see that the answer is definitively no? So Licanudo, every time you look at a chart, is it up or down? Do I have momentum? Is my path clear? Does that make sense? Because once you answer those questions, you're going to look at your smaller chart. And what you have to remember is one simple phrase. And you're done with the large chart. The large chart at this point is irrelevant. I want you to get in the habit of saying, because I have momentum and a clear path, I will buy a pullback at an area inside of triggers. And look at it, check out how cool this is. With this look, and this happened at 9:30. This isn't me going historically trying to convince you of something. At 9:30 a.m., when my rules were met, I could say, guess what? Here's my triggers. There's the area inside. My entry pattern relies on a reversal bar. And the market continues up. And my triggers have moved. And now here's my areas inside of triggers. And the market, whoops, I messed it all up. And the market continues up. And it continues up. And there's my reversal bar. And we started looking here. And now I can say in no uncertain terms, if I get a pullback, the market is most likely to bounce at these areas inside of triggers because of this momentum and clear path. And you will develop the confidence to activate a limit order just above the highest point of support. And if the market comes back and gets you, you are in the highest probability trend trade you could ever take. And this is the exact same pattern that I talk about every day. And this is the exact same pattern that you can prove wins more than it loses. And with those advantages, life gets pretty freaking easy for the average trader. So trading isn't a desire to win, and trading isn't a need to pay the mortgage. Trading is nothing more than a pattern that you can prove wins more than it loses. And all you have to be able to do is go through that order of operations. What direction is the market trading? Do I have momentum? Is my path clear? Do I have an area inside of triggers? And if you answer yes, that is where, if you are following the KISS plan, you will pull the trigger and you will never know if it's going to win or lose. But you can say to yourself, because of this pattern, this is a trade that's more likely to win than it loses. This is a trade that produces a statistical advantage. This is a trade that gives me an edge. And guys, it's important that you go back on the NinjaTrader charts. It's important that you go back and look for that momentum, right? And look for that clear path. And let's do this one real quick. So Licanudo, and I don't mean to put you on the spot, but I think that if you play along, you'll be floored at how quick you get to where you want to be. Do you see the momentum, the smalls below the large, the separation, the space between? It's the same momentum look every time. It has nothing to do with fibs. It has absolutely nothing to do with this divergence. You just simply say, the market is going down and I have momentum. Now I want you to see how rule number 2 is designed to keep you guys out of trouble. Everybody in the room, do you see that price reached a divergence low? And it happened right there. And none of the triggers have broken through. And this is a termination condition. Nobody sees it. Everybody sees it. Some of you see it. It's important to be able to see that because I want you to see what happens on the small chart. If you choose to ignore it and you say, I will sell an area inside of triggers, this is what's more likely to happen than isn't. From that termination condition, you are more likely to get the ever-loving snot kicked out of you because you traded into an area that stopped a market. And if you traded a mid-band inside of triggers without momentum to push it, you are more likely to lose that trade. Does that make sense, guys? And if you get sucked into areas inside of triggers without advantages, you are more likely to lose that trade. And what the methodology does for you guys is it puts you in a position to say, I know exactly what I need to see. I know exactly where I need to see it. I know exactly what has to happen for me to take a trade. And guys, it's very liberating. I have no idea what those are, Wayne. How did you put them on there? I would look at your indicators over here and I would bet dollars to donuts. It's probably a volume indicator maybe. So hit your drop down. I bet you'll see something that says volume maybe. Because you have 9 indicators on that chart. Is that your small chart? You've got 9 indicators on yours, which is more than I have. So the answer is probably in that drop-down menu. But it looks like volume. Will you show me a picture of the drop-down? And here's what mine looks like. And I don't have anything with volume. But you can go to indicators. And if you put the volume in, probably down here, there's 1,000 ways to see it. And I would wager to say that you included volume somewhere in there. And where did it go? One-to-ones, trigger lines, trigger lines, trigger lines. Divergence, T-bands. It's probably inside of either Dynamics or Oracle. Both are having runtime errors. I would click on your chart and hit F5. Oh, well, that's why they're not running. Okay. Do this. Double click on them. So if you double click on an indicator, well, it will typically bring up settings, and you can look at inputs. But I'm really not sure. I've never seen that. Sorry, that probably wasn't the answer you were looking for. But I don't have anything like that. But it looks like volume to me. That's my guess. And if you're really just like, man, I don't know what that is, I don't dig it, don't want it, get me back to good, you can always come down here to the workspaces and just reload, start fresh. Sometimes starting fresh is amazing. Sometimes starting fresh is outstanding. And I know you trade gold. So there's the link to the whole page, but there's the link to the Nexgen gold chart. You can always start fresh, guys. All right, I'm going to take a minute. When I come back, you're welcome. When I come back, we're through all the pictures. Post them if you got them, guys. But otherwise, what we'll do is we'll watch the NASDAQ and we'll watch the markets. And if we can get rules met based on that KISS plan, we'll enter and manage and talk about what we see. So that's crude oil. I'll leave you with crude oil. The trend is down. I don't really have momentum. No areas inside of triggers. And guys, you can see how the market just isn't giving it right now. Whatever came out during crude oil inventories didn't make everybody excited about what they saw. So we'll open up the S&P as well. This will take just a second to load. I'll be back in about 4 or 5 minutes, guys, and we'll finish strong today. was purchase software, and the money would fall out of the sky, excuse me. And then you either make the decision, okay, I'm going to do this. I'm not sure what I'm doing, but I'm going to keep doing it because I keep seeing people in the room posting winners. Because I keep seeing that pattern repeat. And you're excited and you're simulating and you're probably getting lucky. And this is where we all end up, where you're like, yep, I made $1,000 on simulator. Clearly I'm an expert trader now. I'm going to get into the market. I'm going to go live. And guys, I went live with a $6,500 account. Within 2 hours, 5,000 of it was gone because I didn't have rules. I didn't know how I was going to manage. I didn't know why I was going to enter or exit, guys. It took 21 trades, 21 consecutive losers to pull $5,000 out of my account. And I got knocked down to the I don't know stage. I don't know. I have no idea what I'm doing. I don't know what I'm looking at. I probably should have listened when John Novak told me, Mark, write down your rules and learn them. Know what they look like. Practice them and post in my room to make sure you're doing it right. And right here, guys, this is where people make decisions. This is where people say, hey, trading's not for me. And guys, it's not that trading's not for you. You just didn't put into it what you wanted to get out of it. You had dollar signs in your eyes when it's the process that yields the results. And we've all been there. And I'm not knocking. And if it sounds like I'm talking to you directly, this is probably your lesson. But it's right here where people either quit and miss out on the greatest career in the world, or they start the process of doing it right. They start the process of looking for advantages. They start the process of posting in the room, of participating. And then it becomes a pretty good uphill climb. And I can look at no less than 10 names in this room that I remember when you hit this stage. And I got that message from you where you told me, Mark, I don't think I can do this. And we took a deep breath together and we said, hey, let's go back and try to simplify. Let's try and make it easy. Let's not look for all the money. Let's look for the best money and see what happens. And guys, this is where we start to climb that road. And Nexgen's been teaching people to day trade for nearly 30 years now. And I don't believe that this has changed one bit in 30 years. So if you are in that I'm a little frustrated stage, if you are in that I don't feel like I'm as consistent as I need to be stage, there's hope. You're right where everyone else has been. All right, Miss Claire. Triggers down. I love this large chart. Look. Triggers down. Strong side of the triggers. You take a close below the small triggers and you ride that trade all the way down from the strong side, Miss Claire. Isn't it crazy how often this repeats itself? And Claire, you may have even taken a short here, right, into the area and took a little loser and said, dag nabbit. And then it pulls up and it says, oh, crud, we forgot Claire. Let's go down. Great chart read. Patience isn't your strong suit, Cam. It's nobody's strong suit. If we're being completely honest, there are very few people in this room that are happy to sit and do nothing. It's just, we've all been taught, and I would say, I would wager to say that the average age in the room is somewhere mid-50s. Because that's when we can finally do this, right? Late 40s, early 50s. And guys, we're a generation that was taught that hard work, well, Jen, you are mid-20s. But we can't all be fashion models. Some of us had to go through life the hard way, not relying on our youthful good looks. Pete, everything's down. Directly into a zone, didn't work. Directly into a zone, didn't work. Boy, that's a hard way to make money. I have a face for radio. You're darn right I do, Wayne. But over here, when you have momentum and you have path, trade directly into a zone again, right? And this time you get away with it. This time you get away with it. And Andy, you're self-sufficient, right? I'm going to set my goal. I'm going to set my goal, and damn it, I'm going to make it happen. And guys, there's a lot of you that can do that. There's a lot of people that can do that. And just, you don't have to. I guess is what I'm saying, is you don't have to. You don't have to go on your own. You don't have to do it yourself. That's what the class is designed for. But Andy, I don't think you're uncommon in that. I'm going to do it myself. I'll watch a couple videos and I'll be a day trader. I'll read a couple manuals and I'll be a day trader. And guys, a lot of you can pull that off. But that little bit of feedback pays dividends. And our generation is the generation that was taught hard work. Hard work is how you get to where you want to be, right? Work harder, not smarter. Stay busy. Don't be the guy sitting there doing nothing. Be the person that's active. Be the person that is always in motion, because that's the person that succeeds. And day trading is very counterintuitive for our generation, because typically the people that do the least are the people that find the highest level of success. The people that sit idle are the people that really tend to find the best results. And Cam, to go back to the idea that patience wasn't your strong suit, and I have this conversation 10 times a week, and it takes everybody a different time to get there. Cam, when you believe that momentum, path, and entry produce the best results for you, when you believe wholeheartedly that you don't have to trade into a termination condition, that you don't have to trade without momentum, that when the triggers are no longer separated, it takes away your advantage. And if you would just wait for the perfect look, you can make more money than you ever spend, than you could ever spend, than you would ever need in your lifetime. That is when patience creeps into your trading plan. That's when sitting still becomes almost like mandatory. That's when you're like, I don't care what the market does. I don't care if it goes up. I don't care if it goes down. Until my rules are met, I refuse to enter. And patience comes from trust, Cam. And you can know that the pattern works, but it takes a while to trust it. It takes a while to be able to sit on your hands and do nothing. And Andy, you say, looks like I hate odds favorable momentum into trouble. And I don't know, maybe you do. I don't know. Maybe you took a trade and it didn't work out. But it's wild, guys. We all have this journey and everybody goes through it. And we all take losers and we all take winners and we all get lucky. And we go from this giant, awesome, you didn't take the trade. Nicely done, Andy. But we go through the idea that eventually we get to a point that we know the next trade's coming. We know that the market trades billions daily. We know that $174 million is exchanged every day in the S&P. And if I just wait for the best trade, I have a higher chance of reaching my goals. I appreciate that. And Cam says, and the continual support, the live room, it's the big reason why you're an owner of the products. And I appreciate that. And I love what I do. I love to teach. And John Novak loves to teach. And we're not here because this is what we have to do to pay our bills. I mean, this is how we pay our bills. But there is such a passion behind what we do every day. And I do hope that it's evident. Wayne says down. I love it. Uh-oh, Wayne. Market says down. There's nothing in the way. Wayne waits for the pullback. You don't have an area, but you get that white bar, which I know you like. Next bar opens. Do you want to see a trick, Wayne? You'll like this. So the way I read that is that when this bar closes, you're entering the market. Is that right? You're waiting for that confirmation bar to close. I'm going to show you something cool real quick that you may have seen, you may not have seen. Almost there. Almost there. Where'd it go? Maybe that's it. Here we go. So Wayne, the white bar is awesome, right? That breakout bar is so cool. But one of the things on that breakout bar, I'm going to make this huge so everybody can see it. See that high volume area? And you're so squished, they're hard to see. But you see the high volume area of that breakout bar, Wayne, when your rules are met for a short? If the next bar opens below that area, that's a huge feel good. I am sell button crunch right there, especially from a termination. It's that open below the highest volume area that says, okay, not only did we break out, but they couldn't even start above it. And that's a great indication, and it may save you. It may get you like an extra 7 or 8 ticks. And look at it right here. There's your down bar, and the next bar opened above the HVA. Here's your up bar, and the next bar opened below the HVA. So there's like a real world example right there. Up bar opens below, down bar opens above, and they're like, ugh. And then down bar opens below. Holy crap, look at it go. You're welcome, Claire. This is such a cool concept. And this is the concept that John Novak discusses. Let me find it for you guys. Let me see. Let me search. I'm going to find it real quick. This is the idea that John Novak talks about in the masterclass, the volume analysis masterclass. So let me get you guys a link to that. Go watch it. And he talks about that opening. So the logical stop, let me put this in here real quick because if I multitask, I'm going to fall out of my chair. So the logical stop, oops, let me get back to your picture. What you're saying, and Wayne, you don't have any areas to protect you here, right? And that's one of the concepts. Having an area always creates more of an advantage. Having a reason for the bounce always tends to be beneficial. But the reality is that if the market gets 2 or 3 ticks above that breakout bar and the next open, things aren't doing what they're anticipated to do. So the anticipation becomes, get over here. The anticipation becomes, because it opens lower, I expect, I'm hoping, I'm wishing, I'm wanting the market to continue down, especially with that momentum. It helps. And if the market gets back above that breakout bar, couple ticks, Wayne, it's probably going up to here. So for me, when I take a breakout and the open on the other side, I'm just above that white bar. That's where my stop's going to go because that's where I feel like my advantage is no longer in play. And it does. It takes so much risk off of a trade. And if you look at Jen's charts, if you go back and look at Jen's charts, so the HVA trade, Zane, I just called you Zane, not Wayne. My oldest son is Zane, is when you've got an area right here, right, and you have a termination condition, the HVA trade says that when the triggers roll to sell a pullback, let me make these bigger just so you can see them. To let it break away from that termination, to let it pull back to the HVA line, sell the HVA line, because that's the highest concentration ever. And that's the HVA trade. Are you comfortable with that trade? You know that trade, Wayne? What that open below the HVA does is what you're saying is I am predicting the HVA line, And the same reason you would put your stop just above it, because if that HVA fails, it's probably going up higher. You could do the same thing. So I would go back and look at those, and you'll be pretty stoked on it. And Paul, I've got you. This is an awesome pattern, and that link that I put for John Novak's masterclass really goes into it a little more in depth. And I had a little management something for TradingView, and I'll put this in the room as well for you, Wayne, or anyone else that wants it. Claire, of course, you look at it too. But it goes back to, and it shows two options for using those high volume areas. The idea that if you're already in a move, Wayne, and you get an up bar followed by an up bar, you can use that high volume area. See how it opens above? I'll just put my stop, my runner stop right behind it. Let that thing crank. Yeah, 92 ticks is pretty awesome, man. And Wayne, I have a feeling with you, you are going to go next level on your profits the more comfortable you get with TradingView. So there it is again. It opens below, never gets back above. It's a great way to use that for bigger holds too. And then if we look at your chart, the market's going down, odds favorable momentum, up bar, down bar, trailing stop, right? Down bar, stop above, down bar, stop above, down bar, close on the wrong side, get out of the trade. Absolutely beautiful. I mean, absolutely beautiful. And do you see how the trigger lines told the story the whole way? That's the part that we forget about, guys, is the 1 minute chart. That's immediate momentum. And when they're screaming, it's hard to stop. It really is. Guys, these are the conversations that I want to have every day. You didn't take it? I bet you'll catch it next time. But you're practicing management, right? And Wayne, from the strong side, well, you're even on the weak side with nothing in the way. But with nothing in the way and odds favorable momentum, it's beautiful. So nice. All right, Paul, are you with me? You want to build a chart real quick? Look at that. Oh my gosh. All right, so you know how to build a chart, right? So new chart. So you need a 13.2 for the NASDAQ. So we'll go to the NASDAQ. And then up here, Paul, this is what puts it in play for you. And let me give you the picture too, just so you have it for life beyond. Nexgen NASDAQ futures 13.2 dynamic Renko bar. That is going to be your template that goes right up in here. So drop down 13.2 dynamic Renko bar, and then you have to have tick replay. And then once you hit OK, it'll make it look just like this 5-1 chart over here. You're welcome. You are so welcome. Miss Jen, termination. Let's see what you did. Odds favorable momentum. And you just jumped the fudge in, huh? Oh, no, you didn't. So check it out, Wayne. You'll dig this. But Jen, do you see how your entry was the pullback to the zone? That was your momentum trade right there. And you didn't take it. Totally cool. Not a problem. These triggers are still down. But Wayne, look at her chart. There's her high volume area on the breakout bar. Look where the market opened. And Jen, a little late on the entry. But there's that same pattern. And she takes it all the way up to 85, all the way to that zone. Beautiful trade, Jen. The down triggers made you wait a little bit, but yeah. So is it a true momentum trade? Not really, because you're not strong side. What are you doing? And Wayne, this is what you love to do. Jen, you're taking from the weak sided triggers, you're taking the best momentum look ever, and you're saying this is going to be hard to stop. And I don't even have a short trade until up here. So let me see if I can go long to get that short. That's all it is. And it's really well done. It's small chart momentum running you that way. You with me, Cam? I want you to do this every chart, guys. So Cam, this is your trade. You guys can listen in. Cam, is the market going up or down? Wayne, have a great day, man. Great stuff. Dude, make me work management with you. I love management. Um, and your life's going to change a little bit, I think. I can tell just by looking. So Cam, are we up or down? Okay, so we're up. I love it. We're odds favorable momentum, and we have a clear path. Miss Jen, have an amazing day. So Cam, this is what I want you to learn. All right, here's your consistency piece. The rules say buy a pullback at an area inside of triggers. And I never change that language, Cam. Why? Because triggers define where the retracement is most likely to go. Cam, do you have any areas inside of those triggers? Okay, I'm sorry. On the S&P, you're absolutely right. You had pink one-to-ones. On the S&P, Cam, those pink one-to-ones are about as useful as, I don't know, licking your fingers with a mouthful of food. Um, so the entry rules, and my bad. Let me go and annotate. Let me change. The rules say, come on, snag it, at an area, and now your areas can be fibs, mid bands, or yellow one-to-ones. And I apologize. I didn't put that in there because pink one-to-ones are what we call small swing one-to-ones, Cam, and they're virtually useless on the S&P on crude oil. On the NASDAQ, they carry some weight. But on a 5-1 chart, they're based off such small swings that they're not a part of the entry sequence. Does that make sense? So my apologies on that one. So your only area is this mid-band. And that mid-band is on the wrong side of the triggers, below the triggers, which means that rule number 3 isn't met, which means that there just wasn't an entry there. And they weren't going to give it to us anyway, it looks like. Now let's back it up. Let's back it up. And we'll say with momentum and the potential to break, trigger lines define the retracement zone from the top to the bottom, right? And I want you to notice something about this market that went up with the momentum and the potential to break. It never gets below those trigger lines. And it continuously bounces off of areas inside of those trigger lines. And that's one of the reasons that language becomes so important, Cam, because it's easy to see momentum. And it's so easy to recognize that clear path. And the entry rules keep you focused on having that edge, having that advantage, understanding that in order to enter the market's most likely to retrace somewhere between the bottom of the triggers and the top of the triggers, but it's most likely to bounce from the areas within. And that's what it does with this look. Bounce, 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 and it never goes to the other side of the triggers. So the idea that once you learn that simple phrase for entry, when the rules are met, not only do you know exactly where your trade originates, 100%, but now you know exactly where your stop belongs, right where the market should not go. Because once you get to the wrong side of those triggers, Cam, you just don't know if, when, or where that market is going to continue up. And you don't know if, when, or where that market is going to continue down. Does that make sense? This is why I'm such a stickler. Learn the language for entry, and it'll keep you out of so much trouble. If you go through the simple process, I don't have momentum, my path isn't clear, and there's no areas inside of triggers. No matter what this market does next, I don't care because I can't stack the advantages in my favor. I can't say I've got the best of the best. I actually have to say I've lost everything that I hold dear to me to take a trend trade. You're not. Why? So, Cam, this is where I know without question you're not listening, right? Do you have momentum? Are the smalls separated from the large? I'm going to show you something. Guys, this is how trading can become effortless for you. So, Cam, I don't have momentum. I don't have a clear path. I don't have areas inside of triggers. Why on earth are you looking for a trade? There has to be a point in your lives, guys, where you say, I can't find an advantage. I don't care what happens. It's not mine. And then one more reminder, this particular market typically trades $174 million a day, Cam. $174 million a day. And every now and then they're going to go without you. But the idea is during that 174 million that's exchanged, and there we go back to midnight, can you find a way to make $400 or $500 a day in that? Can you find a way in all of that movement to put yourself in a six-figure income by only capturing $400 a day consistently? And that's it right there. You have to believe the next trade is coming, that every tick isn't yours, that sometimes they're just going to run. And now, Cam, can I show you a trade that was invented by a Nexgen user that says when the momentum is strong, when the path is clear, when there's nothing in the way and no reason to worry about anything, I'll just jump in, make $100, jump out. If they get back above trouble, I'll just jump in and I'll just jump out. And that's what's called a chili dog trade, and it's not a Nexgen trade. It was actually created by a Nexgen user that realized that when the large chart has momentum and path, a trend trade is not the only way to make money. And he takes that trade and he takes it in small chunks. He takes it $110 at a time on crude oil, $112.50 at a time on crude oil. And he said in the room, he told us a while back, last year, his net income based on jumping in and jumping out with momentum and path is he cleared $160,000. And Cam, this is why trading without advantages produces more losers than winners. Do you see it? Right here, you thought, oh shit, they're going without me. But they didn't. They did everything your indicator said that they were most likely to do. And that's that patience piece, Cam. Does that make sense? What a great example. That was pretty awesome to be able to go through all that and look at the live market. I'm going to shut down YouTube real quick and get you guys that video.